Disclaimer, this is not financial advice. Always do your own due diligence before putting your money to work. With that out of the way, let's have some fun and enjoy the episode. What's good, y'all? Welcome back to another episode of the Rich Off Gains podcast. This is episode 40, man. 40 episodes in. Let's get it. Let's keep going. Let's continue the movement. Let's continue to believe. Hope you all had a great weekend. Happy Money Mondays. I hope you all got your money today in the market. Without further ado, let's get right to it. So, man, let's talk about last week, what took place last week in the market. We had some pretty interesting price action last week. We broke all-time highs to start there. Let's just start there. We broke all-time highs. We got a break above 760, seeing a break and push all the way back, all the way up into a new level, reaching upwards to 776.8, right? And so from there, we pushed from 776.8, saw a little bit of a reversal going back down to 767. And from there, we had to bounce back up, closing out the week at 773. Okay, so what are the levels to expect out of SPY going forward? What can we look to see happen going into this next half of the year now that we've broken all-time highs? So let's talk about what made the market rally the way it did. Simple answer, we had a lot of uptrending strength come into tech, specifically memory, software, and semiconductors. So Micron, AMD, Microsoft are a few names that all contributed to the rally that we saw take place last week. Now, what can we expect to see going forward? Can we see higher? If so, how much higher can we see? My end of year projections for SPY, I believe I said was around 780 to 800. I believe that that's still within realm and within reach, and we are very, very close to those levels. Do I think we can get there in the next month? Possibly. I think it's very possible that we can see that happen if we continue to see the strength come into the market from those specific sectors, and also other contributing sectors like healthcare, finance, all contributing a big push higher in their sectors to help contribute to the SPY seeing a push higher. Those would be the indications to tell whether or not we are able to see higher or not. Now, we can see lower, and this is typically the period of the year where the season of selling typically starts to kick in. Now, we have seen a little bit of selling pressure come into July. That was a lot of selling pressure that we saw for at least the most we saw probably this year, aside from April, where we had the pullback that we had early April. So we did see some selling pressure kick in early July, mid-July, and then late July we saw the rally come in, and early August we saw the continuation of the rally, and now here we are today, where the market closed up, I believe, pretty much right where we were on Friday. So not too much movement today in the market. And the reason being for that is because coming up this week, we have some economic data around PPI and CPI, I believe. Wednesday and Thursday, we have data related to those two economic data points. So just be mindful of that. That's one of the reasons why I believe we might not see too much movement this week, but going into later this week, we can see a lot more movement. And then pushing through the month of August, this next week of August and the last week of August, I think that it'll probably form some form of a flag from a technical analysis standpoint. So if you guys look at the charts of SPY and you take a look at the charts, you can kind of see it doing it now. But if we're continuing to range between 760 and 776 or 780, we can start to see it form a zone that it holds for the next few weeks. And then after these next few weeks, if we get a break above that zone, we can then see continuation. But if we don't get a break above that zone and we get a break down below that zone, then we can see lower. So just be mindful of the two scenarios that could possibly play out. I think that we're more lenient towards the market pulling back first due to just historical data around the midterms and September and August not being the strongest months in the year. So those are my personal ideas around what I think the market will do, but I will not take action on those ideas until I see confirmation. As of right now, we are very bullish, we are very strong, and we are pushing up. And as long as we continue to break higher, we can also see higher. So just be mindful of that going forward into this next quarter and next half of the month. So yeah, let's talk about what stocks, like I already mentioned tech, but let's also talk about what other sectors contributed to the rally that we saw take place last week. So for best performing sectors last week, obviously number one, we had technology seeing a 6.7% pushed higher. Ticker symbol XLK. After, like I said, memory, semiconductors, and software all rebounding and having a lot of rallies, we were able to see a lot higher. Top performers in that specific sector were Marvell, Applied Materials, Intel, AMD, and so many others that they did not mention. But yes, those were the main movers in the sector. Moving on, we had industrials, ticker symbol XLI, seeing a 3.4% return. Also having a lot of a rally after oil prices started to fall, industrials started to rise. So top movers in that specific space, Boeing and transportation strength. Lastly, we have materials, ticker symbol XLB, seeing a 3% return. Rode the same rally, broadening rally around industrials and tech. Those top movers weren't really clearly reported, but the overall sector did move, and the ticker symbol is XLB if you guys want to check that out as well. As for weak performing sectors last week, we have number one, energy, ticker symbol XLE, seeing a negative 3.4% return. Crude oil fell third straight week in a row, easing of fears around the Strait of Hormuz and the talks and negotiations starting to seem like they're coming to a conclusion for the war, thankfully, hopefully, and prayerfully. But the worst stocks to perform in this specific sector were DVN, Chevron, CVX, and ConocoPhillips, COP. All saw downside that contributed to the stock seeing a lot of falling pressure. Moving on, we have utilities, ticker symbol XLU, seeing a negative 1.7% return. With technology, materials, and industrials all seeing a rise, this caused weakness in the utility sector to see a lot of failure come in. And so it wasn't much of it was more so a rotational thing. So money rotating out of utilities, rotating into these other sectors that were performing really well. Lastly, real estate, ticker symbol XLRE, seeing a negative 0.2% return. Also a rotational based decline as more money flowed back into technology, materials, and industrials. So those are your worst performing sectors. Definitely keep an eye on energy. Chevron is not a bad stock to own. I believe that it's a good stock to own if you like dividends. And dividends are really good for you, especially if you're a person who wants passive cash flow. You're not somebody who wants to be in the market actively, and you don't want to have exposure where you're trading options, trading futures, or you're buying and selling shares on a day-to-day basis. In other words, day trading. So if you want dividends, Chevron is definitely a good purchase. I believe it's still closer to all-time highs. So Chevron still is closer to all-time highs. So I would wait for a pullback. If I were to want to buy Chevron, its all-time high price currently is, let's take a look here. Looks to be all-time high price is somewhere around 214.7. So I'd say about a $40 drop, which we already saw back in July. July was the time to buy it, man. I'm not gonna lie. At 164, that would be the buying range. I'd look to buy Chevron. If it comes back down there, I would definitely say buy it and hold it. Their dividend that they pay about a 3.82% dividend yield on every share owned. So if you own one share, you'll get 3%, pretty much 4% back on the share that you own, right? So if you put $100 into Chevron, you'll get $4 back. And so that only increases as you invest more money. And that's why dividends are so good, because it's passive income, and passive income is cash flow. And cash flow is always a great thing, because now you can fund your lifestyle, you can fund your investments, you can fund pretty much a lot of things by not doing anything. And so if you guys want to have a dividend account and invest your money passively, dividends is the way to go, especially if you want to reinvest that dividend, and now you can let that compound and grow into more assets and value and wealth. All right, so that's just a little food for thought. If you guys don't know, having a dividend is very beneficial because you get the passive income from it, and it's also a tax write-off, I believe, because you don't. I gotta look into that. No, I'm not gonna say that. Ask a CPA about that part. But dividends are very beneficial for cash flow. I would say that much at least. So just keep that in mind. And yeah, let's move on. If you guys want more tips and tricks about day trading and investing, make sure to click the link in the bio, www.continuebelief.com. I share a lot of free That's right, free resources and tools, tips and tricks about how to day trade, how to get started investing, and so much more. So make sure you guys check out the link in the bio. Thank you guys so much. Make sure to leave a like and follow. And yeah, see you guys later. So, should you invest in Apple? Now, Apple has been seeing a little bit of a decline. After earnings, it pulled back a little bit from 340 all the way back down to 308, currently sitting around that level. Should you be investing into Apple? I believe that Apple is a fantastic company. I believe that they're a staple company. They're a household name. You can't really replace Apple. I'm using Apple to record this video. I'm using Apple every day. Laptops, phones, iPads, music. Like, they have a really good, well-ran machine when it comes to their business. The value of it isn't a bad valuation. I would say this, if you want to own something that is stable, own something that is not, risky, Apple is that choice. It's withstanded it's withstanded time and time again through every economic recession, downfall, COVID, like all the major problems. Apple has been able to withstand those things. So Apple is a very stable and sound investment. I don't think it's a bad purchase. Now, do I think this is a great price to buy it at? Absolutely not. I don't think it's a great price to buy it at. I think it's a good price to buy it at. If you want the great price, you want to see it pull back at least $60. So if its all-time high price was $230, you want to see it come down to at least $170 to then be interested in buying it at a great price. But I would look to want to see it even come lower. And I believe not. It wasn't $230, it was $330. So $330 down $60 would be $270. So $270 to $260 in that range. And then from $270 to $260, I would then want to see it come down about to $210. If it can come down to $210, that is my key buying price range that I want to be loading the boat for Apple, right? Because now I know that it's over a very highly valued company that's undervalued in the stock market. And that's the great place you want to be buying stocks at. Your sweet spot is buying a highly valued company at a low value price. Buy low, sell high. You want to buy the best of the best companies at the best of the best discounts. You don't want to buy the best of the best companies at the best of the best prices. Similar to SanDisk. SanDisk ran up all the way up to 2K. Has seen it pull back all the way down to 1,200. Now, do I think that that's a buying opportunity? Given the run that it's had, the run from $100 all the way to $2,000, that's an insane return on investment. I think that $1,200 is not a bad price to buy it at. And I think that SanDisk is here to stay. So I definitely think that if you are interested in buying SanDisk and you've been wanting to buy SanDisk, seeing it go to 2,000 and come back to 1,200, you really can't ask for much more than that, because that's a 80% return, 80% pullback on an investment. Because 10% of 2,000 is 200. So 200 times, no, that's 40%. That's my sweet spot, 40%. So that's even better. And so, 80% is even better, but it's 40% of half of that. So that's not horrible. So if you want to buy SanDisk, if you want to buy Apple, I would say hold off on. It's not a great buy, it's a good buy. It's a good sound investment. Buy Apple if you want to park your money somewhere. You want to see, I believe they also do dividends as well. If you want to see a return on your investment, small term, steady, slow and steady kind of thing, and you want just somewhere to park your money, it's similar to gold. Like, Apple is held at that stature. Apple is like the equivalent to gold in a business form, because it's cash flowing, it's generating value, it's providing services, it's doing so many things that allows it to be of value. Gold is just gold, but Apple is a business form of gold. So if you wanted something that's quality, Apple is your choice. If you want something that's a growth stock, SanDisk still has room to grow. So seeing a $2,000 high all-time high price and seeing it pull back to 1,200 is a discounted price. That's a great price to buy it, in my opinion. Now, if it comes even lower, you should love it even more, right? Because you're getting it at 1,200. Why would you not want to get it at 1,000, 800, 600, whatever? If you really believe in the company and you did your due diligence, then you should not have a problem with investing at lower prices if it were to pull back. That's not even saying it will. That's just saying if it were. So you want to be mindful of that. Don't always hesitate on pulling the trigger because you think you want to see it come lower, or you want to see the price drop more in order for you to think it'll get in. It will not do that. The lower you think it'll go, the quicker it'll go up. You will miss out on that opportunity if you don't take action. So take action on the opportunity that you have presented in front of you. And if it does come down lower, then you take action on the thing that you ideally want it to happen. You can't fantasize and dream in the market. You have to see it for what it is and analyze it for what it is. You have to take advantage of what you see in front of you. Otherwise, you'll miss out every single time. Had I bought SanDisk when it was 400, had I bought SanDisk when it was 300, I would have been a happy camper right now. I didn't buy it. I hesitated. I wanted to see it come lower when it was too hot of a stock to want to come lower. It was in such high demand that the valuation drove itself higher and higher and higher and higher and higher. Similar to what happened with NVIDIA 3 years ago, when it started out the year somewhere around 200. It ran up all the way over 1,000, 1,500, had a stock split, came down from 150 all the way to 90. I bought back in because I knew, okay, next time I see that opportunity, I'm taking advantage. I'm not going to hesitate and wait for it to go even lower, because what's the likelihood of that going even lower? If it's a great company, it's not going to go, it can only go so low. It can only go so low. So you can't allow yourself to block yourself from the opportunities that the market's presenting to you. You have to take advantage of what the market presents to you, and then if it presents better opportunities for you, then you take advantage of those opportunities. So this is something to think about going forward into this next half of the year, going forward into your investment journey. You never know if there's an investment opportunity that you think is hot, or you like it and you want to buy it, and you like the price, and you see that it's come down to your criteria, buy it. Now, if it's a stock that you're not certain about and you're not confident in, and you don't believe in it as much as you believe in this other thing, buy the thing that you're more confident in. Always go with the thing that you're most confident in working out for you, because you got to trust your gut. You can't allow yourself to overthink or overanalyze something and get cold feet and not take action. That's going to block you from a lot of success. You got to just take the action. But yeah, y'all, so those are my thoughts on those particular stocks. Comment below what you guys are looking at. Comment below what stocks you guys want me to go over, and I will do my deep research and deep diving on those things. I've been hearing a little bit about photonics and that being the next big wave. Do I think that that's a possible investment opportunity? My answer is I don't know. I have to do my research first. I just heard a little bit about it over the weekend, and I heard a little bit about some ETFs that are forming and bubbling around photonics. And pretty much what photonics is, from my understanding, from what I've saw, is it's another form of energy for semiconductors and AI factories to use to have better, cleaner, more efficient energy. So everything in AI is just about efficiency. So how can we be the most efficient with this AI? And what are the things we need to create and put in place to be the most efficient with AI? Those are the questions that we have to ask ourselves in order to understand where the money's flowing. That's the questions we have to ask ourselves. So I'm going to do more research on that, and I'll come back to you guys next week and give y'all the rundown on photonics and what I think about it, and if I think it's worthy of buying right now or not. Similar to quantum compute, I also like it, but I don't think that it's worth loading the boat for until we get closer and closer to the actual scaling out of quantum computing. Now, this is not a bad time to get started, meaning get a starter position into quantum computing. Rigetti, RGTI, ticker symbol. There's many others, and then aerospace and quantum computing, there's ETFs around it, like SPCE is an ETF that allows you to have exposure to quantum computing, and there's so many other ones as well that I can't think off the top of my head. But quantum computing is another thing that a lot of people believe will be the next big investment. My advice is to do due diligence, stay patient, stay poised, see what the big companies and the big leaders are speaking on and talking about and what's in demand. If you pay attention to what Jason Wang has been saying the last few months, he has been giving little hints after little hints after little hints around what is going to move the market, what's going to be the thing that needs to be have the most attention, what needs to have the most money put into it, because he sees it. He's the one in the driver's seat operating all the creation of AI factories, semiconductors, GPUs, and he knows what AI needs in order for it to scale and be as efficient as we want it to be. So pay attention to Jason Wang, people like him, people like Tesla, people like Elon Musk and Tesla, SpaceX, people like Anthropic CEO, people like OpenAI CEO. You want to pay attention to these leaders in the space that are having these podcasts and having these meetups and having these events and doing these things, talking about the thing so that you know in your own game about what is to expect next. So that's it for this episode, y'all. I hope y'all enjoyed. This was going to be a little short, but we will be back next week. I might try to drop a midweek video kind of going over the data that came out in the middle of the week. It's your boy CB. Thank y'all for tuning in. God bless you all. I hope you all have a great week. Good luck in the market, man. Let's get to it. I'll see y'all next time.